Hi, welcome to Main Street Macro. I'm Neela Richardson. Wall Street has historically had a very complicated relationship with good news. Look, they, like all of us, want the economy to grow, but when interest rates are high, like they are right now, what they really want is the Federal Reserve to start cutting interest rates. And the Fed is more likely to cut rates when things in the economy get a little bumpy than when they're going strong. And that's exactly the position that investors found themselves last week while they were waiting for the Fed once again to tailor the interest rate policy to the economic reality. Well, for the rest of us, if investors have a hard time digesting what good news means for their investment, what should the rest of us do with good news? Well, here's three things to keep in mind. The first thing to do with good news is identify it. And last week, we saw a lot of good news come to the fore. First of all, the IMF increased, revised upwards the global economic outlook. That was great news for the global economy. And they did it for one prime reason, that the US economy was growing. In fact, the United States grew by 3.1%, it's estimated, over the course of 2023, very far away from those dire recession predictions we heard a year ago. The second source of good news was labor market productivity grew last year. And this was good news for wages and for companies who are looking to do more with less. And then the third place to look for good news is the jobs market. Hiring stayed solid, and also wages are unlikely now to trigger another bout of inflation. And that's great news. Now, the second thing you should do with good news is contextualize it, because the reality is things are not always good all the time everywhere. And we've seen pockets of weakness within this overall headline good news. First of all, let's take that global economic outlook. Yes, it's been revised up, but it's still lower than historical levels for the global economy. Again, let's take productivity. Again, up from the lowest point of productivity growth ever on record in 2022. But the overall number for 2023 at 1.5% is very much shy of the 2.1% 50-year average. Now, the third thing you should do with good news is personalize it. Because the reality is, Main Street isn't like investors. Investors have much more freedom to tailor their portfolios to a given data point and to really massage their investment strategy based on what's in and what's out on a given week. Businesses, small businesses, on the other hand, have to keep operating and growing their companies regardless of what the data point says on a Friday. And so, for that reason, it's really important to personalize this information. Manufacturing, for example, not growing like the rest of the economy. So, there's pockets of weakness, pockets of strength in all of this good news. What Main Street needs to keep in mind is that if the economy is still growing and inflation is still coming down, that is good news to build on. Well, thanks for watching the Main Street Macro. For more insight on the week ahead and whether those data points are good or bad, please check out adpri.org.